Sometimes you look at a company's quarterly report and the numbers just don't seem to add up. That's exactly what's happening with insurance giant Great Eastern. Their latest results are, well, they're a real head-scratcher. We're seeing sales go down, but profits go up. So what is going on here? Let's dive in and figure this out together.
Okay, so right off the bat, you see this big, kind of scary number, a 21% drop in what the industry calls total weighted new sales. Now, for an insurance company, that's basically their main measure of how much stuff they're selling. And seeing a number like that, a 21% drop, that would normally have alarm bells ringing all over the place.
And that brings us to the big question, right? You see a number like that for a company this huge, and you have to wonder, is Great Eastern in some kind of trouble? Are things starting to go south? Well, hang on, because the answer is probably not what you're thinking.
To really get what's happening, we need to look past that one headline number, because this isn't really a story about a company in decline. It's more of a strategic paradox, a tale of two very different numbers that are pointing in completely opposite directions.
And this slide, this lays out the puzzle perfectly. On one hand, yes, the volume of new sales, that's the TWNS, it fell by 21%. But on the other hand, the profitability of those sales, a metric called NBEV, it actually jumped up by a really healthy 16%. So wait a minute, they sold less, but they made more profit on every sale. How does that even work?
Let's quickly talk about this term NBEV because it's super important here. It stands for New Business Embedded Value. The easiest way to think about it is this. If the sales number, TWNS, tells you the quantity of what they sold, NBEV tells you the quality. It's all about how much long-term profit the company is going to make from all the new policies it just signed. And the big takeaway here is that Great Eastern's new business is getting way more profitable.
So how did they pull this off? Well, this didn't just happen by chance. It was all part of a very deliberate strategy, especially in their home turf of Singapore. I like to think of it like this. Imagine a bakery that decides to sell fewer cheap donuts so it can focus all its energy on making those fancy, expensive custom cakes.
And that's exactly what they did. This was a conscious choice. Great Eastern intentionally changed what kind of insurance products it was pushing. So that drop in sales we saw, it wasn't a failure. It was actually an expected side effect of their new game plan. This slide really breaks down that bakery analogy for you. They moved away from selling a ton of those single premium products. You can think of those as the simple, low-profit donuts. Instead, they started focusing on higher-margin products, the stuff that helps people with long-term financial planning. Those are the profitable, more complex custom cakes.
And you can see the result of that shift right here in their biggest market. Because they weren't pushing those high-volume donuts anymore, their sales volume in Singapore dropped by a pretty hefty 28%. This one market really drove the company's overall sales decline.
But here's the flip side of that coin. That exact same strategy, focusing on the more profitable custom cakes, is what pushed the whole group's new business profitability, that NBEV number, up by 16%. So yeah, fewer sales, but every sale they made was way, way better for the bottom line. It's a classic case of choosing quality over quantity.
But hold on, the story isn't over yet. That smart shift in sales strategy, that was only one reason they did so well. There was a whole other engine firing on all cylinders. And that was their investment portfolio.
And wow, what an engine it was. The profit from their shareholders fund, which is basically the money they invest for themselves, grew by a massive 45%. The company says this was thanks to some good market conditions and just smart management of their portfolio. This is a huge boost to their overall numbers.
This table just puts it all in black and white, doesn't it? The profit growth from their main insurance business was pretty steady, but, just 1%. But the growth from their investments, an explosive 45%. It really shows you that Great Eastern isn't just an insurance company. It's a serious investment powerhouse too.
So let's put all the pieces together. We've got a smart strategy to make their sales more profitable, and we've got a massive boost from their investments. So what does that all mean at the end of the day? Let's answer that first question we had. Is this company in trouble?
The answer is a resounding no. Not even close. When you add it all up, the group's overall profit for its shareholders grew by a very strong 12%. So, despite that scary headline about falling sales, the company is actually doing better and is more profitable than it was a year ago.
So, let's just recap the big takeaways here. First, that drop in sales wasn't a mistake. It was a plan. Second,
Great Eastern decided to sacrifice some sales volume to get higher quality, more profitable business. And third, when you add in a fantastic performance from their investment arm, you get a company that's in a really strong financial position, one that's clearly playing the long game.
Of course, that's what happened in the past. But what about the future? The company knows full well that the economy out there is, well, it's pretty choppy.
And here's the take from the group's CEO, Greg Hingston. He admits that there's a lot of volatility and uncertainty out there in the world, but he's also showing a lot of confidence, saying the company is going to remain steadfast and stick with the exact strategy we've been talking about, a strategy that's all about sustainable, long-term growth.
And all this really leaves us with a final thought to chew on. What Great Eastern did here is a fascinating case study. They made a very clear choice: profitability over just raw sales growth. In a world that's facing a lot of economic uncertainty, it brings up a really critical question for any business out there. Is it smarter to focus on the quality and profitability of your business, or should you just chase growth at any cost? It's definitely something to think about. Thanks for tuning in.